Live.
All right.
So while people are piling in and everything like that, you wanna talk about tax season? It's right around the corner, I'm sure.
Well, this week has been pretty busy for me. I did my first audit with the IRS. I had to represent a client who unfortunately went to a tax preparer that I'm not going to say the person wasn't qualified, but the person wrote a whole bunch of things on her taxes that she could not deduct. So she hired me to do the audit for her so she wouldn't have to go down and talk to the IRS agent herself. And it was actually a really great audit. The tax compliance officer I got was he was, I wouldn't say special needs, but he did have like a helper dog, and it was a golden retriever, and it was really like unexpected because I'm walking in and I'm sitting down in his office and there's a dog at my feet licking my hands. So it was kind of weird.
Wow.
But it was a good audit.
So was this a crypto-related audit, or this was just a general audit you were dealing with?
No. This is a general audit. I'm actually looking forward to the crypto audit, so definitely trying to get my name out there because I'm looking forward to that. But this was a regular audit. It was actually a business and deducted a lot of things on the business that wasn't supposed to be deducted. So the IRS caught it, had to go down to the revenue building, and it was a great audit just because the guy, again, with the dog, the helper dog, that was very interesting. And then the case was already laid out. And because I am a former government auditor, not tax, but I used to audit for the government, I kind of already knew exactly what was going on. So it was just one of these things where, okay, let's lay the case out. It was supposed to take 3 hours. I got out of there within 2, and the guy thanked me afterwards. He was like, even if this was your first audit, you did a really good job. Like, he was trying to help me help my client. So it was good. Nice to get one under my belt. And this week I filed 3 crypto tax returns, including mine. It wasn't as painful as I thought it was going to be. Definitely a lot of work, which I'll show you some of the screenshots about that. I took out all the sensitive information so I could show you some of those examples. But yeah, I think a lot more people are going to be filing. I'm definitely getting a lot more questions. The software out there is definitely helping out a lot. Bitcoin.tax, cointracking.info. But this is the beginning of tax season, so I still have a little bit of free time now, but it's going to hit me very soon, and I'm probably just going to disappear.
Wow. Yeah, no, I'm sure you're going to be busy. So tonight we've got a pretty exciting, well, I don't know if no one gets excited about taxes, or at least I don't. I'd like to think, but taxes are one of those things that are really important. So, I don't wake up in the morning saying, oh my gosh, I got to do my taxes, but I need to do my taxes, right? And it's coming around the corner, and, people like you are critical for all this. So tonight we're going to do something I think really exciting. We've got Rebecca on, and she's going to give maybe a quick intro about herself. So I'm not going to talk too much about her, but she is a CPA and an EA, which I believe is like a super CPA that's good at taxes. And she specializes. She personally invests and trades cryptocurrencies, and she specializes in cryptocurrency tax prep. So she has some stuff that she's going to cover. She's going to share some recent stuff that she's done, but we want to make things a little more interactive. So obviously nothing here is, tax advice or professional advice. We're just going to run an open Q&A. So if you are trading or purchasing or buying cryptocurrencies, and if you have questions, we have a CPA and an EA. You can't ask for anything better to answer those questions. So as we get started, Rebecca, would you mind maybe introducing yourself, kind of tell everyone a little bit about yourself, your company, what you do? Why don't we just start with that?
Okay, so my name is Rebecca Samuels. My company is Pythagoras LLC, located in the Washington, D.C. area. but I'm able to work with clients worldwide, and I actually have a couple out in Afghanistan. I have to say hi to them that have sought me out for tax services with their crypto, and have clients all over the U.S., which is amazing. I started specializing in the space because when I made my business, I wanted a particular area to focus in on, specialize in, and when I was focusing on it, crypto wasn't as big as it is now. So it's kind of amazing to me how it blew up over the last few months. But when I came in, it was still like a blip. Everyone was talking about it, but no one was in it. I figured this would be a good area for me to get in on, professionally wise. And once I learned about the blockchain, I saw the changes that are going to be coming to my particular profession. So I decided, you know what? I might want to take this a little bit seriously beyond just, being a CPA and doing people's crypto taxes. So I'm a heavy investor and have lots of coins on a number of wallets. I attend every Bitcoin cryptocurrency meetup I can when I can. If you're in the Washington, D.C. area, we're throwing a meetup next Tuesday evening, I believe, to talk about cryptocurrency taxes, some mining, and general questions. Contact me for that information. But yeah, that's it.
Wow. That's really cool and exciting. Our headline for this, right? There's two things in life that are certain, crypto and taxes. So we're going to talk about both.
Yeah.
What else can we do? So I believe you actually, so for people who are on, some people are tuning in via Facebook Live. Some people are actually directly in the webinar. If you have questions, we will definitely do our best to get to them. There is a Q&A box in the Zoom webinar. So as your tax questions come up or crypto taxation questions come up, ask them there and we will get to them. I understand there is a chat. It's great that people talk in the chat and stuff like that, but based on how things go in the chat, if you ask a question in the chat, there's really no way we can get to it because, we have to scroll up and down and it just becomes too confusing for us. So please put your questions in the Q&A. For those of you that are tuning in on Facebook Live, thank you for tuning in. We're excited to have you. And the way to ask questions, if you want to maybe post them on the comments, as we go through the Q&A, we'll try to, catch up with the comments, but we're going to give preference for people who are actually in our live webinar. So let's get started now, Rebecca. So why don't I believe you said you prepared a screen share or you prepared an exercise?
Yeah, I have two examples, which give me a minute because I'm actually, okay, there's the screen share. So I'm going to share my screen. I want to share the photos, I guess. It's my first time using this, so let me know what you can see. But this is my screen share of a crypto tax that I did this week. So this individual has been involved in crypto, I want to say since 2014, and he's made numerous trades, but of course back then people really didn't understand that crypto to crypto trades were taxable. So now we're going through about 3 years of cryptocurrency, and this is for 2017, but this just shows you that for every single line that you see here, there is actually a form that needs to be filled out, literally. Is this big enough for you? Oh, you're muted.
Sorry, no, I just didn't want any background noise because the kids are running around. I can see it if I look closely. I think, I know some.
Okay, I just made it bigger.
Mobile phone, if you could enlarge it a bit for some of us. I personally, I like small things because I'm blessed to have very good eyesight. But,
Awesome.
I'm sure there are others that would want to look at it a little more closer, so.
Yep, so I did just enlarge it on my screen, but I'm not sure. If you're not able to see it on the bigger, I will go ahead and enlarge it and then reshare my screen, and maybe that will work.
Yeah, let's do that just to be safe.
Okay, what about this? Do you see, is it bigger now on your end?
Let me take a look. Yeah, it looks much better. This is great.
Okay, so pretty much and this isn't all of his trades. This is the only thing that I could fit on the screen. But pretty much for every single line that you see here, line 1, there's an actual form that needs to be filled out on the 8949. So this person in particular had about 238 trades, I want to say, and I had to go through and calculate each and every single one of them. And it takes a lot of time, right, to go through all of this. Some of the software has made it a bit easier, but there's still some cleanup work that needs to be done, reconciling of coins, as I like to call it, and actually inputting this information into my professional tax software. So,
okay, so Rebecca, just to interrupt you, because this is awesome, but, this is completely overwhelming for me. So I'd imagine for many of the audience, is this this looks like a spreadsheet. Is this a spreadsheet that you export from somewhere? Or like, how do you even get here? Or is this something like, do I need to like keep records of every trade and kind of key them into this? I mean, this is crazy. I mean, well, let me take that back. This is crazy. And when I think about it, between all the times I buy and sell stuff and move things from like Binance to Bittrex or blah, blah, blah. I mean, I personally have like a big mess on my hands and I'm just like, oh my gosh, I'm just going to go shoot myself. How do you even get here? I mean, I think most people are just wondering, how do I even get to here where I know all my trades and, all that?
Okay, so this, right? Okay, so this client actually gave me all of his information and I ended up putting it onto cointracking.info, which is one of the websites that you can go to help calculate your crypto trades off of different wallets. I actually love that site. Another software that I have is bitcoin.tax. I usually go back and forth depending on, in particular, what I need or if I need to check something to see if the amounts are coming up correct. But I mainly use cointracking.info, and all of this is pulled from every single wallet, all of or exchanges. The exchanges have the histories located right on them. Cointracking.info explains to you the different ways of how to pull the actual history down. You upload all of that into the system. You will need to verify that all of the lines are correct. Sometimes it can pull in double entries. Sometimes it doesn't pull in items, so things will need to be manually entered. And I've had to do a couple of those where deposits aren't coming in. I got to sit here and type them out, and that takes a little bit of time. But once everything is entered, you can go ahead and generate a tax report. Now, these are software. I believe they give you between 1 to 200 trades for free, but anything over that, you have to pay for the software. Due to the fact that a lot of people that have, even 3,000 trades are contacting me to do their taxes, I bought the unlimited software. It's pretty expensive, but this is what I use to help the calculations. And after I get the Excel file that I need with this particular information into it, I then upload it into my professional tax software. I know that coin tracking, I think it exports to like TurboTax and maybe TaxAct or some other tax software, but I'm not familiar with that, so I can't give you any advice there. But for individuals that are coming to me to do their taxes, they also provide me this information. This is what I'm looking for. I upload this onto my computer. I have to do a little bit more cleanup than what you actually see here. This is the perfect ending. I have to do some work on my end to get all of this to calculate. But after it calculates, it comes out like this. And then I will actually show you the form. So again, remember, each and every single line you see here is an actual form that needs to be filled out.
Oh, wait, so if I make 100 trades, I'm filling out 100 forms?
Well, I would, or you would, but yeah, you would be filling out. I'm sorry, say that again?
Yeah, not me, but somebody, whether it's me, whether it's you, whether it's someone.
Yes, okay, for some reason my screen sharing stopped, but are you still here with me?
Yeah, I'm here.
Okay, I'm trying to pull up the second picture. So I guess I'm not going to be, after I pull up this picture, I can't share anymore because it's not allowing me to. But yeah, the form that I want to show you right now, there's an actual form that needs to be filled out for every single line and trade. So that's on the Schedule D, and that, you know, it's pretty comprehensive, but because it's crypto and you don't actually have like a lot of information on it, you're just going to be pulling up the basic information for it. And all of this gets transported via your tax return to the IRS, and they'll see it. They'll see that you have crypto. And, you know, I'm pretty sure the fun is going to start within the next year or two when they start auditing either individuals on the blockchain that are not reporting their tax, Bitcoin taxes, or ones that are reporting their Bitcoin taxes. I'm pretty sure the IRS is going to be, you know, picking out a few people from there to gain the experience. Okay, so I have it up. Give me a second. I'm just trying to share the screen now. Okay, that's not working. Alrighty, so this is the screen and it is big, so hopefully you will be able to see it. So this is the 8949 form, but it goes onto your Schedule D. So this is the form for every single transaction. And the photo disappeared. Well, I tried to share it, but I hope you could see that that form gets filled out for every single line.
Wow. You still there, Rebecca?
Yep, I'm here. I'm here. Oh. I'm trying to figure out why my screen, it's like it stopped sharing and all that, but whatever.
Well, we can just talk. Okay, so that's the form. So is there some sort of way to auto-generate this? I mean, because I mean, even from your end, to just key in 3,000 transactions, that would take you an inordinate amount of time.
Yeah, so like I said, I'm going to cointracking.info after all of the trades are calculated and all of the numbers more or less make sense. You want to make sure nothing's double entried. You want to make sure that trades that are supposed to be there are there, and anything that looks weird is not. And after that, you can use their reporting system. They have an Excel report that you can download. That's what I will be advising my customers or my clients to send over to me. And then once I have that actual file, again, there's some cleanup on my end just because of my professional software, the way that it is, I have to get it perfect for the file upload, but more or less it does upload. It takes a little bit of time, but it's not as bad as I thought it was going to be. And, you know, they were predicting tax headaches with cryptocurrency. How can anyone keep track of this? Oh my gosh, it's awful. But no, it's actually really not that bad. I did 3 this week, and I did my own, uploaded it to the IRS. My tax return's accepted. I have to pay, but it's okay.
Wow. Okay, so let's go to some Q&A. We've got some questions that are starting to pile up, and I know there's a lot to talk about. So what do we have? The first one, we have John Jamerson asking, can you talk a little bit about the rate that crypto gets taxed? You know, and there's a long-term version and a short-term version and so forth.
Okay, so short-term version, any crypto trades under a year. So if you bought Bitcoin yesterday and you trade it into another currency in 6 months, that's considered a short-term trade because it falls under the year. If you have a gain or loss between that crypto, that's a taxable event that will be reported on your tax return. The short-term rates are your ordinary tax rates. And so if you fall, well, the tax rates just changed because of the new tax law, but depending on where you fall, if you're in the 12, 15, 20%, that's what you'll be paying for your crypto short term. If you're long term, it'll be 0, 15, 20, again, depending on where you fall in the bracket. And the long term is taxed at its special rate separate from your income.
So now this is interesting. And let me ask you this question, Rebecca. So from my understanding, the new tax code, businesses now have a flat rate that is actually pretty advantageous. So should I run my crypto through a business, right? Because my business rates are significantly lower than personal rates.
Yes, we talk about this a lot. And I'm still in the no camp. And I've talked to a couple of other crypto tax professionals to make sure that I wasn't crazy. And they also say no. Now, again, we're talking generally here, right? Just the average crypto trader who, maybe does a lot of trades one month and then next month they decide to go easy, or they're not trading right now because the market's down and they're staying away from everything. For that type of person, I really don't see the advantage of making an LLC, making an S Corp, making a C Corp. There are the tax rates, right? You're absolutely right about that, especially with the sole proprietors and the S Corps. Any pass-through entities, you'll now get that maximum of 20% tax deduction. But we need to talk about the compliance that, again, I just had a business client audited this week. We had to go through miles and miles of paperwork for her to claim her business deductions. A lot of people that I know, when they make a business, they don't do what's required, especially with the compliance parts. If you have to have your annual minutes for your S Corp, if you have your board of directors, do you have books of accounting? Are your accounts reconciled? They don't spend that much time into it. And again, I just don't see the point. But at the end of the day, if you choose to make a business for the sole purpose of trading crypto, that is your prerogative. If you were my client, I'd probably advise against it unless you had extenuating issues, but it is your choice. There isn't anything saying that you can't have a business for trading crypto, at least not yet.
Okay, so the crypto tax rate, and let's just clarify, because ultimately, everyone's situation is different, right? So if they really have questions, they need to contract you or find someone else that they can consult with. But from a high level perspective, and this is my understanding, and again, I'm not an expert, but, under the new code, the old personal tax rates still apply. So I could hypothetically, if I do a short-term trade, which is a position held under a year, I could pay a rate as high as 40%, if I'm on the 20-year end of the scale. If I file, create, an S Corp, and I'm a single member S Corp or an LLC, I'd probably go the S Corp side to avoid the self-employment tax with, that end. If I do an S Corp and as a single member S Corp.
Oh, hold on a second. See, that's the thing about it. Most people aren't aware, but so I understand what you're saying with the S Corp. You can avoid the self-employment tax because the company is supposed to pay half of that, but you're also supposed to take reasonable compensation for having an S Corp. And most people aren't aware of that. And that's where they're getting kind of jacked up with the IRS, because the IRS is seeing that they're passing through the majority of their income to themselves and they haven't taken reasonable compensation. Reasonable compensation is just stating that you have the S Corp, you're an employee of the S Corp, and you're supposed to be paid wages from the S Corp. You have to take the majority of your compensation in wages, and the rest can be passed through at the end.
Okay, so let's say there is some amount I have to take, and it varies between the amount, but let's say I pay myself 50 grand a year on the S Corp, which only would happen if I made massive gains on the crypto side. So backing off that end of the, quote unquote salaried side that I make, with the S Corp as the sole partner, my tax rate is at 15 or 20% that I would get, through the new tax.
The deduction for the S Corp pass through is 20% max, but it also there's thresholds. So after you reach, I believe it's like 157,000 or something like that. After you reach that, it starts to go down until you can't even take that 20% phase out. That 20% deduction, it phases out.
So wait, so help me understand this. So let's say, and again, this is completely hypothetical. You said the limit is 150,000. So if I make $200,000 in profits off of crypto trading in my S Corp, if I was personal, that $200,000 would probably be hitting at like a 30 or 35% tax rate. Now,
No, you're absolutely right. It'll be like, yeah, you're right, 35, 37, somewhere over there.
Somewhere up there again. And again, I'm just going off the top of my head. So if I make $200,000 trading cryptos in short-term gains, I'm hit at a 35% tax rate. If I make $200,000 in my S corp, I would only pay 20%, right, on that, because it's like falls under the business tax law, or am I missing something?
Yeah, you would pay a lower tax rate. You definitely would. And that's what I'm saying, like extenuating circumstances, if that's the case, then yeah, that makes sense. But when we're talking about just generally, again, for the general average person, I would not advise someone to make an LLC just for the purpose of trading crypto. However, if you do that, yes, you're able to take advantage of the business rate for the income taxes versus the capital gains, which could be, as you said, 35, 37%, depending on exactly where you're falling on the income scale.
Okay, so yeah, so it's a threshold level, right? If I make $10,000 a year on the crypto side, probably not worth doing. If someone makes $1 million, on crypto,
Yes.
it's going to be a good idea to set up a business. So then the question is, can you retroactively, right? Can we retroactively set up the business? Like, so you're right. Like, let's say I go through the year, I start saying, okay, well, maybe I make 10 grand this year, that's going to be exciting. But let's say, like, I don't know, let's say Tron goes to like $1 million, and I don't know if it will or not, I'm just using an example, and I bought it at, 2 cents or 3 cents or whatever on the side. So now my Tron coins are worth, $1 million, and, the 3 grand I put into it is now worth 100 grand. Now, or let's say 200 grand, right? And as crazy as that sounds, the crypto markets have had some level of success with that,
Oh, yeah.
So now let's say, I bought $2,000 in February. Now it's November. That $2,000 is worth 200 grand. Can I quick incorporate an LLC or something and like quick claim it in there or do something on that end so that my 200 grand is taxed at 20% instead of 37% or whatever on that front?
Yeah, you can go ahead and say, for example, in the S corp, you can go ahead and retroactively make an S corp election for your business. It would have to be something that's already standing, but you can go ahead and do that. So that possibility is there. As long as you're not crossing, well, even with January 1st, in some instances, you can make a previous year election as well. But at that point, it gets a little bit complicated, and you're probably going to want to sit down and talk to someone to do the election and understand the ramifications of it. But that option is there.
Okay, no, that's interesting. So, maybe this is a product for you to come up with, right? No, but this is actually really good advice, right? If I'm a new crypto trader and I'm putting, $1,000 in the market and it's January, it doesn't make any sense for me to, set up the LLC. But knowing what I know and, having someone like your expertise, I could, just start, not spend the money on the LLC. And if, the moons are in alignment or whatever, and, we buy the equivalent of getting an invert coin at, 2 cents last year or at like a half a penny, or like getting into Neo at 17 cents, like how we did, and the thing blows up, 20,000%, then it's like, oh crap, we're going to call Rebecca and all that paperwork. And, instead of paying 30% or 35%, she'll
pay a lot less.
We'll be like, hey, solve this problem for us. And as long as we do it before December 31st, chances are it's easier to get done.
Yeah, exactly. So yeah, the option is there. Definitely, it's a possibility. I'm gonna be honest with you. It's gonna be very interesting. I would like to see how the IRS is gonna respond to all of this, because this isn't the only way people are trying to avoid paying the capital gains tax. I mean, in my personal opinion, buying and holding long term just seems to make more sense. But I do understand, like you said, if someone blows up overnight on a coin that they got in on a cent or half of a cent, at that point it kind of makes sense where you're like, okay, you want to try to figure out other ways so you can take your wealth without being hit too hard. And that's all about tax planning. That's definitely something that everyone should do with their tax professional. You should tax plan with your professional. You shouldn't get a surprise, you know, when you start doing your taxes the next year of, oh, guess what? You owe $5,000. You should already have planned throughout the year with your tax professional to be aware of what your tax consequences are going to be.
Wow. That's a really cool strategy in terms of being able to retroactively do that. So no, that's exciting. Well, let's continue. I'm sure there's more questions. So we next have a question from Jacqueline, and actually we can probably combine these two between Jacqueline and Sherry. Basically, how should we track our crypto buys and sells during the year, and what type of records should we be keeping? So, I mean, they're essentially the same question, but why don't you do your best to kind of wrap that whole in?
Okay, sure. So number one, you want to know what exchanges you're on and how long they hold their histories. That's very important because if you're unable to get history for, you know, if you're like on Ether Delta and it doesn't keep your history, then at the time you make whatever transaction you're going to make, you're going to want to take a screenshot of that. Or at least write it down, have a diary of your trades so you know what you've done. And, you know, if you could also get emails, if any of your exchanges send emails, keep the emails. Have a special folder in your inbox that just accepts emails. So at any point in time, if, say, for example, you're audited, you can go back and prove whatever happened really happened. Here's the proof. Here's the email. Definitely, if you're on a exchange that doesn't keep, say it only keeps 3 months of data and then erases them or whatever, you're going to want to get that information and export it to your computer, email it to yourself. That'll probably be best because you always have access to your email, right? And from there, at the end of the year, you can upload all of your transaction histories from your wallets, from your cold wallets, from your soft wallets. If you have Exodus on your computer, they have histories as well. You can just upload everything. Like I said before, I use both bitcoin.tax and also cointracking.info. I use both for clients. I use it for myself. And that is how I get the tax reports that I need to go ahead and do someone's taxes for crypto.
Okay, I'm going to share my screen real quick, and let's just verify so everyone can see what we're talking about here. Share screen. Okay, sorry, let me move the Zoom controls out of the way so everyone can see. So this is the site for bitcoin.tax. And
Yes.
how does this work? It looks like do I need to sign up for it right away? Is this something, you know, what is this site do for?
Well, there it goes, how it works. I signed up right away, so I'm not sure if they allow you to import trades as a guest. But again, it does give you a certain amount for free. I think this is the one where they give you 100 for free. And they just want you to see how the software works so that in hopes that you'll buy it, right? Because at the end of the day, they want people to purchase their software. But it's here. You can upload your Excel, CSV files. You can even upload your APIs from your different exchanges as long as it's supported. For the most part, it worked for me. I think I had a small problem with GDAX, but not really too sure when I was trying to upload the API, but after all of your trades are uploaded, it provides you a tax report. It gives you different versions of tax reports. And I know they also try to incorporate like other countries as well. So for example, the United Kingdom and I believe Australia was on here. And yeah, it's here. It says like Germany is on here. There's Australia. So yeah, there were a couple of different ways that you can pull taxes. They're definitely trying to be known. They would like people to have their software, and I think this is a yearly thing. I'm not sure exactly how much it is for an individual. I bought the professional software, and again, this is what I use to help calculate my trades for my clients.
And next we have, you said cointracking.info. So now maybe my question is, are these one of these, is this an either or thing, right? If I'm on bitcoin.tax, I don't need cointracking.info, or do I need to have both, right, to track my stuff?
No, you don't have to have both. I bought both for my business just because, again, I'm doing this. I've actually gotten a lot of leads from Bitcoin.tax. It markets to everyone. So I've had a lot of different clients. Some that are sitting on millions in crypto have come to me from Bitcoin.tax. So I'm really grateful for them. The least I could do is buy the software, right? So I have their software. And cointracking.info, I was just trying to compare the two to see which one I really, really like. Cointracking.info is more for the individual, but it also gives you, like, if you want to show others your portfolio and how well you're doing, it gives you that information. It, again, calculates all your trades. It gives you different ways if you want to do first in, first out, last in, first out, high value in, first out. It gives you so many different ways to do so many different things. So it's really whichever one just really tickles your fancy.
Okay, so I can use cointracking.info, I can use bitcoin.tax. Maybe there's another one. It's not like I need both. I pick one.
No, you definitely don't need both. Like I said, cointracking.info is more for the individual. So if you are really heavily trading, especially day trading, if that's what you're doing, you may want to sign up for cointracking.info. They pull your APIs in automatically, and it continues. You could tell it to either manually set or you could constantly set, but it's more for the individual, and it gives you some really good information on your trading and how you're doing. So again, though, these costs. So, I'm not sure what's the cheapest version. I just know that I got the top of the line unlimited. So it was a couple of $100 for the software.
No, great. Cool. Okay, so let's go to the next question. Is the tax on the initial purchase of the cryptocurrency or the profit realized when you withdraw? That's Adrian asking that question.
Okay, so there is no tax when you buy crypto. If you use your $20 to buy $20 worth of Bitcoin, at that point, there is not a taxable event. So you can buy, I'm talking about going from cash to your first currency. There's not a taxable event for that.
Okay, so then let's talk about where the chain of taxes start. So
Sounds
if
good.
I go, so I'm on Coinbase, and yesterday, I don't even know where it is now. Yesterday or the day before, Bitcoin dropped to $5,900. Now I'm not that smart, or I wasn't up at 4 a.m, so I got in, I think, at like $6,500 or $6,800, or I get in somewhere over there. So I go buy $1,000 of Bitcoin at $6,500. I don't pay taxes on that, right?
No.
Correct.
You just need to record the transaction, or again, Coinbase is going to record it for you, because I see that they're really, really starting to be more heavily compliant with, showing people the amounts. I saw my whole interface change with Coinbase, and I was like, yep, they're really starting to see that regulations coming for this. But yes, it's not a taxable event. It's just, you need to know how much you bought it for, because that's your starting point.
Okay, so we'll just use simple round numbers, just to be right. These are completely fictitious. So yesterday, or 2 days ago, I bought $1,000 worth of Bitcoin for $6,500. So
Okay.
then what happens is I transfer it from my Coinbase to, let's see, Binance was down. So let's say I transfer it to Bittrex. Okay, so I transfer it to Bittrex, and then I convert my $1,000 worth of Bitcoin into X dollars of, I don't know, NEO or something like that, right? So I basically convert my Bitcoin into NEO. Now, between the time I bought my Bitcoin for $6,500 and today, when I converted my NEO, the price of Bitcoin went up from $6,500 to, I don't even know where it's at right now. See what we knew to make
I think it was like at 8 last time I checked.
It was at 8. I don't know. Let me just look. Okay, it's down a little.
Oh, 79.
But let's say I did it during the day, so it was at $8,000. So my Bitcoin went from $6,500 to $8,000, and then I converted that into X number of NEO shares.
Yes.
So, what does that equate to? Do I have a tax liability there because I haven't taken any cash out, or tell me what's going on?
Yeah. So even though you haven't cashed out, when you did the conversion from the Bitcoin to, I'm sorry, I forgot what you bought, but the other crypto that you bought,
Yeah,
that
whatever.
is a taxable event.
Mm.
So buying the crypto, not a taxable event. Transporting the crypto you just bought to another exchange is not a taxable event. Converting that crypto to another crypto is the beginning of the taxable event. And at that point, you would need to know, again, what's your starting amount, how much you bought for, to the ending amount, what you converted to. And then when you convert to the Neo, this now becomes your starting point. And until you convert the Neo to either Bitcoin to cash out or whatever, when that conversion takes place, that's the ending point. So it's just a continual, what's the starting amount, what's the ending amount, now you have a new coin, what's the starting amount, what's the ending amount. And that's how all that stuff is translated on that 8949 report that I showed you, where it had every single line. Those are the actual transaction line, and it's showing your starting point, your cost basis, and it's showing your ending point, your proceeds, and you subtract the two, and that's the amount between the subtraction is your taxable gain or your taxable loss.
Oh, okay. So then I pay taxes. So like hypothetically, if I converted that to, my other altcoin, and you're right, I even forgot what it is. The other altcoin I didn't
Neo,
do.
I think it's Neo.
Okay, maybe it was Neo. Let's just make it simple. Let's say instead of paying $1,000, I bought one Bitcoin. So I bought one Bitcoin for $6,500, and I converted my one Bitcoin into Neo for $8,000. So basically, I have a gain of $1,500, and if that's all I do, I actually, because I switched it within 2 days, I have to pay a short-term capital gains tax on
Yes.
$1,500.
Yes. And, when we're talking about $1,500, the short term capital gains, I mean, if your short term is 15%, then I can't do the math right now. I don't have a calculator out, but that's what it is, right?
Okay, so
And
I owe taxes on $1,500 essentially.
yes,
Talking about now, I hold my Neo. I keep holding it. I keep holding it. I don't pay another tax unless I sell my Neo or try to convert my Neo into something else.
yes,
Oh, okay. So hypothetically, if my Neo was $100 and it goes to like $1,000 a Neo, I still don't pay taxes on that. I'm only paying taxes on the 1,500 differential when my Bitcoin went from 6,500 up to $8,000.
exactly. And that's where the tax planning comes in, right? So if you know the particular date you held the Neo, and if you could, look at the market histories and time these markets correctly, you could be like, okay, in October, November, early December, things really, really start to pop, right? So you buy your coins then, and then you hold them for a year, and then hopefully the past, I know it doesn't happen, but hopefully as the trend as it's been in the past years, everything tends to go up at the end of the year. So now you're like, okay, when it comes to next year, December, I'm going to sell. I'm over the year point, and I will, depending on where my Neo is, I won't be paying anything more than the 20%.
Okay, so now I'm going to throw a wrench at you because I love throwing wrenches at people. So let's say I convert to Neo, and I converted it, way back when. And I guess this comes to a question of sales. So
Okay.
Bitcoin's at $8,500, and that's great. But Bitcoin maybe a couple weeks ago was at, $15,000 or something like that.
Yeah.
So it's dropped from $15,000 to $8,500. Now,
Okay.
along that same path, Neo, in terms of a ratio of Satoshis against Bitcoin, has increased over the last 3 weeks. I don't honestly know what the number is. This is completely made up. But let's say, Neo back when Bitcoin was $15,000, Neo was quote unquote worth $100, but $100 at a $1,500 Bitcoin valuation, one Neo was worth like 0.1 BTC. And now Neo Bitcoin has dropped from $15,000 to $7,500. So it's halved by 50%.
Okay.
But Neo has increased. So before, when one Neo was like a tenth of a Bitcoin, now one Neo is 2/10 of a Bitcoin. So it's like double the value, but because the price of the Bitcoin has dropped, a Neo is now, instead of being worth $100, might be worth $90. So now let's say I sell my Neo. So in Bitcoin terms, my Neo is worth more, so I actually have a gain. But in dollar terms, because the price of Bitcoin has dropped, Bitcoin, my Neo is actually worth less. So does that then count as a loss, like a paper loss, hypothetically?
Okay, so we are only dealing in USD values. That's how we're calculating the gain or the loss. So even if it's worth more Satoshi, what we're really looking at is how much was the USD value, not what is the Satoshi amount or how much Satoshi did you gain or lose from there. So again, if your starting point at Neo is 100, and I'm trying to use your example, but I may mess it up. So let's just say when you decide to convert from Neo into Bitcoin, it's now 50% less. You're going to claim a loss on the Neo, and now your new coin, Bitcoin, you'll have that starting amount, and whether it goes up or down, as long as you don't convert, that'll be a paper gain or loss.
Wow. So this is, again, I think, where a tax professional comes into play, because there could be strategic advantages, especially whenever the price of Bitcoin tanks, to maybe do a quick conversion to realize paper losses, along the way. Especially
that is absolutely true. If you're going to do that, definitely get with any tax professional that understands crypto, because this isn't like a class, right? I've actually been to a couple of crypto tax classes, but that's because I'm actively looking for them, and they are being taught by like U.S. tax court practitioners who has sat in front of the government and they've talked about cryptocurrency. I don't know too many other professionals that have gone that far to really understand this stuff. So not saying they're not out there, because I know a couple. I'm in a group with a lot of them. But generally speaking, this isn't like general knowledge. And I remember I had a client called me and he said, I called 5 CPAs before I called you and they didn't know what I was talking about. So he was just happy that someone could even talk crypto to him, to even start talking about the different ways we can make your taxes favorable with crypto.
Yeah. So let's just kind of make a good pitch. We have right now we've got over 150 people in the webinar, and it looks like the live has 40 or 50 that are tuned in. So we've got 200 people. So anyone who's tuned in, chances are your accountant doesn't know, not that they're a bad accountant or anything, they just probably don't know about crypto. So we all need to just call Rebecca and give her our business. So Rebecca, why don't you let people know, what your contact info is. So if anything, we can call you and talk crypto, and you'll do our taxes too.
Yeah, definitely. Like I said, my business name is Pythagus LLC. The website is pythagus.com. That's spelled Pythagus. Tax season's really busy right now. So I think my calendar, what I do is I do consultations first before I start working with folks, because I definitely want to know what their situation is. A lot of people are probably just calling me with questions. They don't necessarily want to become a client. So, I'm definitely here to help within reason. And I want to make sure that I can give the information, answer questions, help someone figure out where to go before we actually formally start working together. So I do ask that people use my conference scheduler. It's located on my website, to book a phone conference, 15 minutes. I do offer 15-minute phone meetings for free. Anything over that requires payment. However, I do give back, if not all, a portion of the payment for our conference calls. So, and some of that goes towards the work and everything else. So the details are on my website. Definitely check it out. If you have any questions, you can definitely email me. I'll respond to everything within 24 business hours. After April 15th, I will be a lot more freer to talk. I am an investor heavily in this space. I love chatting with other people that are doing this as well. And I love going to groups and meeting other people as well. So again, you could talk to me regarding the tax portion of it. But like you said, call me regarding crypto. If I have the time, trust me, I love talking about this.
You know, so I was talking with a friend and we were joking. And if I step too far, just, you know, you can slap me virtually. But, you know, I've developed a reputation for putting my foot in my mouth.
Okay.
Somewhat controversial. So at this point, I don't really care. As a guy who is in the crypto space, you know, we're just talking to guys all day, right? We're all talking to guys. It's all kind of boring, you know, it is what it is. But keep in mind, Rebecca is a female, and she is a female that likes to talk about crypto. And it's fun to talk to females about crypto, at least from a guy's perspective. So if you haven't, you know, if you have a tax accountant and doesn't know crypto and just want to talk to someone who, you know, really good looking, she's really smart, give you a hard time. Just call Rebecca.
Thank you.
Talk crypto. Give her your business. It's a great thing. You know,
Thank you.
Go into other stuff, you know, or anything like that, because, you know, before you know it, you know, now I'll be, you know, on some.
No. You're good. You're good. Don't worry about it. You're good.
But regardless, you know, jokes aside, Rebecca's a really smart lady. She's great. She loves talking about crypto. And, you know, if you haven't even thought of taxes, you know, I haven't thought about my taxes yet because I don't think about them till April 14th. And by then it's too late because, you know, it's the day before, you know, get ahead of it. You know, she's even saying, don't call me on the 14th. I ain't going to do anything for you.
Yeah,
you know,
I'm going to be honest with you. No, my cutoff date is April 5th. Anyone that comes to me after April 5th has to pay for an extension, and we will do your taxes in a nice, calm, relaxing. I am not going to be one of these professionals that's rushing to get through to the deadline. I'm not doing it.
Okay. So now you still have your chance. You know, go to pythagus.com, book an appointment with Rebecca. She'll talk to you for 15 minutes. You get to chat about crypto, and it's worth it. It's worth every penny of it. So let's continue on our conversation because we're going to have some fun tonight. Well, we're going to try, right? Because, I mean, taxes is like a dry topic. Like talking about.
It's a really dry, and we've gone over this a million times, but I definitely want to make sure the questions get answered. So at the very least, like I tell people all the time, if you know the rules to the game, you can play the game accordingly, even if you decide not to file your crypto taxes, right? Because I'm here telling you what you should do, but if you decide not to file your crypto taxes, well, as long as you know the ramifications and everything of this, then you can do with that what you will. So definitely want to make this fun, and I answer whatever questions are out here.
Okay, well, let's move on to the next question. We have doylev3@aol.com. I think his name's Doyle, and I apologize if I'm just reading what's on the thing. Doylev3@aol.com is asking, will the IRS accept a tax accounting system that is homemade, professional, and accurate?
So this is a great question. And yes, they will accept an accounting system that is homemade. What you are looking for, okay, so right, you're able to estimate. I'm not telling you to do this, but you are able to estimate your gains to put onto your tax form. Estimates on your tax return, as long as they are substantiated and reasonable, are gain. So you can do that. However, if you are selected for audit, that's the time where your estimate needs to be on point. Because if you estimated you owe $1,000 in cryptocurrency and it ends up being more like $12,000 in cryptocurrency or whatever, now you have a problem. So again, if you can give a good estimate that it's reasonable, backed up by substantiating documents, yes, you can use estimates.
Great. Let's move on to our next question. Hold on. Where did the Q&A box just went missing on me? Give me 1 second. Here we go.
Someone wrote, this tax stuff makes me want to get out of this crypto stuff. Oh, he said, I meant almost, not also. Honestly, it really isn't that bad. You know, I'm going to say this. I have 3 clients that I could think about off the top of my head that have to pay anywhere between $50,000 to $150,000. One of them, I'm not sure about his amount yet because we're still gathering documentation. And again, these are crypto millionaires, right? They have like tons of Ethereum, and they have like $3 million in Ethereum, $2 million in Bitcoin, $500,000 in Ethereum. So they're paying a lot of taxes for this. But a lot of them are thinking of this from the mind frame of, this is money I actually didn't have. I put in $20,000 into cryptocurrency. I waited a year, and now my coins are worth so much more. And now I have, you know, paper millions of dollars, or whatever you want to call it, but they can cash this money out. And when the market goes back up, 2 of them will be cashing out. They're going to cash it out in trunks or whatever their limits are for their actual account, but they're going to be cashing out. And this is money that's now going back into their pockets. So it's like, I wouldn't be deterred. If anything, this would make me want to get involved. Now, obviously, again, you have to be smart about this, right? You can't just get into the cryptocurrency space and start buying everything because everyone is saying this coin, that coin, that coin. You actually have to sit and make specific trades, hold them for a bit, and be smart on when to cash out. The clients that I'm talking about, what I've noticed in their trading history is that the majority of their trades were bought in the 2015, 2016 timeframe, and they sat on them. They might have moved them between exchanges, or they might have moved them into their hard wallets, but for the most part, they bought the coins and they sat on them. And then they waited until it got to a certain amount, and then they cashed out. So if you're a day trader, obviously that advice isn't for you. But if you're someone that's coming new into the crypto space and you're like, okay, how do I do this? What do I do? I really think one of your strategies should be figure out which coins are expected to do well, are good coins, have a good product behind them. I mean, that's what Jarvis does. Jarvis gives us all the research that we need to buy the coins. What's the product behind it? What's the idea? Everything else. And I bought a lot of coins that were Jarvis recommendations. And I'm telling you, I did not throw a lot of money into cryptocurrency at all. And in the height when the market was doing very well, I had about $12,000 just sitting on 3 exchanges. And again, I probably threw $1,500 into it. So I'm looking forward to that, which is why, you know, I bought the Jarvis system, because I really wanted to use their recommendations to buy the coins. I don't have the time to do the research myself, especially with tax season. Things are hectically busy, and I got to keep going to make sure that my clients stay happy, so they'll recommend me to other people. So I don't have time to do the research myself, which I'm sure, you know, if I had the time, maybe I could pick out 1 or 2 good coins. But I will definitely say I've probably bought about 15 coins that were recommended by Jarvis. 3 weren't. 3 were from my clients' recommendations, and all the coins that I had except for 1, PPT, all of them did well.
Great. Well, thank you for that. Tonight we're here to pimp you out. You don't have to pimp me out. So.
Oh no, I'm not pimping you out. I'm just telling you, like, really, like, I'm so happy about the Jarvis system, because I'm telling you, like, some of my trades that were coming in, you know, it's within groups, and it's like what everyone else is saying is going on. So it's like, as an investor, it's like, okay, well, how do I know that this isn't a shit coin that somebody is about to dump all their, you know, all their losses on me or whatever? I'm looking for coins. You know, I think we talked about this as a group, but, you know, cryptocurrency, the blockchain technology is going to affect the accounting world. Not saying that accountants are going to be out of business, but, you know, if you're an accountant, if you're someone in finance, this is an area that you really want to be paying attention to, because the technology that's developing is going to affect our industries dramatically. So I'm just saying that I want, I did all this work to become a CPA. I'm a CPA, I'm out here, I have my business now and everything else. But if blockchain ends up reducing the need for CPAs, I need to also have my millions put to the side so I can relax in peace and just say, okay, I don't need to work anymore. I just pull my money out.
That's great. Hey, so let's just get back to questions. I know we'll keep talking all night. I'm happy just to talk to, a beautiful female like Rebecca about crypto. That gets me excited. And luckily, my girlfriend's not here right now, so I don't get in trouble. We have a really good question. Someone says, wow, Rebecca is so smart and she's working with all these crypto millionaires. But, I'm not a big dog like these crypto millionaires, and I don't have, I don't think, will Rebecca work with a small person, right? Is there a minimum that we need to work with Rebecca?
No, there isn't. I mean, I just put, my company is new. So I'm in my building phase. I'm willing to take on clients as long as you're open to my recommendations. What I don't want is a client that calls me and asks me a question and then they tell me they're going to do the exact opposite. If that's you, we're just not going to have a good, business relationship. But I'm accepting all clients. And what I am trying to do, because I do understand that a lot of people are just entering the crypto space. So let's talk some numbers. Let's be real, right? One of my clients is paying me over $1,000 just to calculate his crypto trades. Like, we haven't even gotten to filing yet. We are just going through the different different exchanges and different wallets, and we are piecing all the information together. This is a lot of work. It's not hard work. I really don't feel like you need a degree to do this, but it's a lot of work. You have to know when something's wrong. And me being an accountant, I can spot things a lot quicker that my clients may not. So I have people that are coming to me that are just saying, look, I don't want to deal with this. You do it, and I will pay you whatever you want for it. But obviously, if someone just entered the crypto space in 2017, at the end of 2017, they're not going to want to pay X amount of dollars in order for me to do that. So I've provided workarounds. Some of my potential clients have called me. We talked about this. If they're able to calculate the trades for me so that all I have to do is more of the cleanup work and checking to make sure that their lines are correct, I give them a break on that. And then obviously if you're within the DU, I give you a 25% discount for the first year. So a lot of DU members have called me and we talked, and I'm going to be honest with you, I'm also thinking about revamping my structure. I want to make it friendly so that, if someone comes up to me and says, hey, I just started, I only made $3,000 in gains, can you help me? I still want to help that person, but I definitely have to make it worth my time, because again, just calculating the crypto, I have spent anywhere between 1 to 2 hours just calculating the crypto, because again, we enter everything in. I have to manually enter everything in. Then we have to look at the numbers. It doesn't look right. Then we have to go back through the histories and try to figure out exactly where the discrepancy is coming from. It takes time that I could have, been doing a tax return or something like that. So there is an extra cost to the crypto, but I am trying to work with folks, especially someone just coming in. You don't have to be a crypto millionaire to work with me. Obviously, it's very interesting when I see the crypto millionaires, because I'm like, wow, I can confirm independently, I can confirm that if you make the right investment, you can definitely end up with some money that's going to change your life.
Wow, I just had an idea, and I think this would be a good idea. I know we've been talking about a class or something. What we should do is we should record, and this might be, 5 hours or 10 hours, but literally a step-by-step in terms of how you actually go about doing all this grunt work, in terms of calculating, prepping this.
Okay.
And something like that, once it's recorded, I think we could offer it for, I don't know, $79 or $49 or whatever, so that the average person who doesn't, have millions, but, they can spend some time to organize their stuff.
Yeah.
I would think we could package that up as a class and then offer it to people. So it's like, okay, if I'm a crypto millionaire and, you know, I got millions, okay, I'll just pay Rebecca $2,000 to take care of it all because I just don't want to deal with it. But I'd imagine if someone gets organized records, it's not going to cost $2,000 to calculate it. If they give it,
it's not.
So
Exactly.
Right now it's going to be a little late because we're in the midst of tax season. But I think this would be a good idea for maybe the summertime, or like in May or June. You could say, hey, okay, you just got in 2018, things are going well, and maybe maybe you don't, $49 or $79 or whatever. You can get the class from Rebecca. You get to watch, 10 hours of her going through step by step how to set all this up. And then, you get your stuff ready. So by the time tax season comes around, now, like even with me, no matter how, like I actually am pretty fastidious about my record keeping, but I still use a CPA. And for me, there's a feeling that like having a CPA do it just makes me feel better because, it's kind of like if I get audited and a CPA signed off on it, and I've been audited before, I just say, hey, talk to the CPA. They're the expert.
Yeah.
It just makes me feel better. It's maybe I'm, wasting money or whatever, but it just makes me feel better. But
that makes sense. I mean, if someone doesn't want me to do their tax returns, like I said, I'm also here to represent people before the IRS. So if you did the crypto yourself and you get an audit notice and you're like, oh, sugar, maybe I should have spoke to a crypto tax accountant or whatever, I also represent clients before the IRS. So I love the clients, right? I'm self-employed. This is my business. This is how I pay for my very expensive apartment in Washington, D.C. The rent here is almost the equivalent of New York. It's insane. So I have to pay my bills. But, I love the clients, but I totally understand when someone's like, I really can't afford this. Any help I can give, I'm willing to. As long as it's not hindering me from doing other things that's producing, you know what I mean? So yeah, I definitely think the video would be a great idea, and I'd look forward to recording that.
Yeah, and I mean, let's be honest, right? You are a CPA and an EA. You are a highly trained professional, and right now you're just giving out advice. Not advice. You are answering questions, right? Because advice. You're answering questions for free, and that's awesome. That's awesome. So let's actually move on to the next question. We have Ido Wu asking, you only file taxes for cryptocurrency if you are trading and making profits. You don't need to if you're buying and holding, right? You want to expand on this, Rebecca?
Okay, so this goes back to that buying question. So if you use your cash, credit card, or however wire transfer, and you buy something directly from cash, you do not need to report it to the IRS. You're just buying and holding. However, you do need to make sure you keep your records for the end of the year. So even if you don't have crypto taxes to file, still get that snapshot at the end of the year. The reason why, when you finally either cash the coin out or you convert it into something else, whether that be a month after the year ends or 2 years later, you need to know what your starting cost is, your starting amount. It's called your basis. You need to know what your basis is. And if you do not have proof of your basis, even the software, if you can't prove your basis from the software, they automatically calculate it at 0. And now you're paying taxes on 0 to whatever the number is.
Wow. Cool. Let's move on to our next question. That was great. Cleo Jones is asking, I understand the IRS starts paying attention after $20,000, and that's question mark.
Okay, so that was in regards to the whole Coinbase subpoena. And okay, so I am not the IRS, and what I've heard coming from the different classes that I've taken regarding crypto and taxes, there isn't a certain dollar threshold that they're looking for. In my professional opinion, they are going to look for people to make examples out of. This still is a new area. They know that people aren't reporting their crypto. That's why I have people that are sitting on millions coming to me because they want to make sure they're getting on the right side. These people are more than likely the targets. However, just because they're looking at or looking to make an example out of someone, that doesn't exempt you from reporting, because at any point in time you could be audited. And if you have not reported this correctly, if you have not reported it at all, if you just don't know, anything could come out of anywhere. Just, I say be safe. But again, if you choose not to report, that's your choice, as long as you know what the possible consequences could be. But are they going to come after someone for not reporting $5 in crypto gains? Probably not. So again, it's your choice.
Great. Let's move on. We have Nichelle Williams. How is crypto categorized according to the IRS? Is it an investment? Is it a security? Would you like to talk about that further?
Okay, so the IRS, their position is that it's property, and it's property that you invest. So for example, if you buy a car and you use it, and then you sell it, technically, I know a lot of people don't do this, but technically when you sell your car, you're supposed to minus out how much you paid for it versus how much you received. And if the difference between that is a gain, you are supposed to pay taxes on the gain of your car. Most people don't do that. Most people don't report. The IRS doesn't really catch things like this because it's not like it's on a blockchain where they could see transactions going back and forth. Crypto is on a blockchain where they can see transactions going back and forth. So in that instance, they may not necessarily know who you are, but they can use different ways to identify you, and they will see that you're not reporting your investment there, that you're not reporting your property if they decide to dig a little bit deeper. So it's categorized as property, it's an investment. If you're receiving it, so for example, if Charles Wu gives me $1,000 in Bitcoin to, as payment, that's actually considered income. The receipt of the money is, the receipt of the Bitcoin is considered income. But after I've accounted for it as income, if it appreciates in value afterwards, it's then investment, and I would pay the capital gains tax. 2 transactions.
And well, the second thing too, right? If I send you Bitcoin, it's recorded on the ledger. So there's me dropping a paper bag in the back seat, and no one knows, we can just kind of wink, wink, it's in the blockchain. They can trace that.
Blockchain.
And yeah, there's no ifs, ands, or buts about
I think
that.
privacy coins. I think the usage of privacy coins are going to go up. I'm kind of concerned about that because it's like some of these privacy coins you can't even really like verify. I don't know how it works. I'm still trying to wrap my head around it. But I think privacy coins are going to go up, start being used a lot more, because I'm sure there's people that just want to get off the blockchain and out of this, tracking of transactions.
Yeah, I mean, this goes back from an investment side. What do we say? Skate to where the puck's going. So I think a lot of people are going to be in for nasty surprises because people think that Bitcoin's anonymous, and there's nothing about Bitcoin. It's at best, security through obscurity, right? Mm-hmm. So I think what's going to happen as government regulators come in, and as more government regulators come in, someone's going to get busted. It just always happens.
Exactly.
A tax professional, someone's going to get busted, and that poor person or those poor 5 people, the IRS is just going to make an example out of them. It's kind of like, older times where, the guy got put in the stockade or whatever, just so everyone knew. So those 5 people, there'll be 5 or 3, I don't know, some number of high profile cases will get busted. And then everyone will say, oh my gosh, Bitcoin is not private. It's on the general ledger. There'll be this big aha moment, and everyone will want to move to privacy coins. It'll just be like, oh, let's move all to privacy coins. And, I mean, if you're looking for a coin pick or anything, we're not going to release that, but research the privacy sector. That is a different sector than the currency sector. And, for anyone who's tuning in, that isn't a subscriber of our service, go check out the privacy sector. And I don't know if it's not I don't know when, the crystal ball doesn't work that, but it will be some time privacy is going to blow up because the general public who thought they were secure and private aren't. So yeah, let's continue on that side. Oh, so here's an interesting one. If you owe taxes on your regular occupation and you owe at the end of the year, and the IRS, I'm going to expand on the question, and the IRS is going after and seizing your assets, could they actually come in and freeze or take your crypto?
That's a good question. I've never heard of that. So as it falls, right?
Of the questioner silent. So
Oh,
we don't
okay.
expose it, right? You know, but I think it's a great question.
Yeah, I think so too. This actually has not been addressed so far in what I've seen, but it still falls under assets, right? So, I mean, obviously, if you owe the IRS money, you're going to have to be severely delinquent and owe a large amount for them to go ahead and levy some of your property. But I don't see why it wouldn't fall under it. It's just that, you know, when you have crypto, we have all these security measures to get in. It's not like it's accessible, like they could put a levy on your house or put a levy on your car. Or even a levy on your bank account. They can't just attach themselves to it like that. But I don't see why not. I think this is going to be a development in the future that maybe those high profile people that we talk about that they're going to be making examples out of, we're going to see exactly what happens to the cryptocurrency. That's a very good point.
You know, that's actually an interesting discussion, and you just made me think about kind of my history. So one of my prior businesses is we built a credit card processor, you know, something like a Braintree or a Stripe. And there came a time, I forget when, I think it was like there was some rule passed on the IRS where, you know, the IRS basically got the ability to file levies against the credit card processors. And literally what would happen, because, you know, if you're the credit card processor, you know, whether I'm for a restaurant or a business, right, all the money flows through me before I make the deposits. And we literally would just get these levies. And
wow.
The way the levies work, I mean, you know, we're just the processor, right? We're not going to, you know, get
IRS. So they just snatched the payment. They just snatched it.
Well, it wasn't just we'd snatch the payment. The levy would come in, and then we were required to notify everyone in the banking market that they were under levy, because there's two things that occur. First is if the guy gets levied on their merchant account, they try to switch to someone else, right? So we would send
gotcha.
And that would freeze their ability to even switch merchant accounts. So like,
wow.
It's kind of like a credit report. You know, if you think about it, like, you know, credit card processors have their own little network, just like how, you know, like, you know, all these professionals, you know, you're registered, you have these networks. So the levy would come, we'd have to send a notice out and freeze everyone else so the guy couldn't leave. And then we would just levy the cash and drain their checking accounts. I mean, that's just processor, right? So you've got someone who's like, you know, they're kind of happily processing away, okay, 10 grand today, 10, you know, it's like your business, right? The money comes in and all of a sudden the money's, or we'd run reserves against that, or because what would happen is we'd first actually divert 100% of the fund. And that was like kind of like your shot across the warning ball. And then they would try to drain out their checking accounts. After that, usually what happened was that would actually prompt a call from the merchant, because you're like, oh my gosh, you know, I haven't got any money for 3 or 4 days. And, you know, now you're overdrafting my account. You know, like they'd be pretty pissed. I mean, most people get pretty pissed when that happens. And we'd be like, do anything about this? You know, this, you know, we are licensed through them. They come in, they push us, you know, they would do that. And then at that point, you know, it would come negotiation, because the IRS does that to like kind of, you know, get your attention. You see really want to put you out of business, because it's like, you know, if you put the guy out of business and he owes,
you won't get your money.
You ain't going to get your money. So then they would negotiate down a 10% reserve or a 15% or whatever. And then the guy would eventually have to pay their taxes, you know, but that like, so that's interesting, because literally that's what happened. And I can imagine, you know, Coinbase lost something or whatever. The IRS could just come in, you know, like tax liens are brutal. They move quick. Quick on that side. And I mean, so definitely. Oh, let's move on to our next question. This is a Rebecca question. Rebecca, I love you. Are you able to just do, well, I added that one. Are you able to just do my crypto tax stuff so I can still go to my regular tax preparer, or would it be cheaper and make more sense to have you do it all?
Okay, so this is a professional question. This has come up a number of times. People don't understand there's actually a liability with this crypto stuff, right? because we're not thinking about it like that. We're just like, oh, this is the investor or whatever, and this is their information. But there's an actual liability as a tax professional. So I'm still debating what I want to do about that one. Again, I'm growing my business. I would like clients. So I was even considering just doing the calculations for individuals and tearing them off, you know, under 200 transactions, I'll charge a certain amount. Under 500, I'll charge a certain amount. But again, there's a liability issue that comes with it. My clients could tell you, I make them sign Bitcoin disclosures stating that they're not going to hold me responsible if anything happens, from the calculation down to the IRS changing their positions. I mean, obviously I'm a professional and I'm going to give the most accurate advice, the most up-to-date advice, and I'm going to do everything as I know how based off of being a CPA and a tax professional. But this is a very changing space and I don't want to be held liable. So I'm going to be honest with you. I don't know what the answer is to that right now. I would prefer to do the entire return if I'm going to do crypto. But I do understand that people, you know, they have a long-standing relationship with their tax professional, CPA, enrolled agent, unregistered agent, or whatever have you, and they probably want to stay with that person. In that case, you know, I'll say this: learn how to calculate the crypto yourself. And the information that comes out from like the different softwares, cointracking.info, bitcoin.tax, your tax professional should know what to do after they get that report. They may have trouble doing the actual calculations, but once they get that 8949, the Excel version or whatever, they should know what to do. If they don't, I'm going to be honest with you, you might want to start looking for a new professional. Times change, technology changes. I don't know.
So let's take a second and we're going to step back again. We've got Rebecca here. She has her business. It's called Pythagoras LLC. Yep. It provides accounting and tax services with a specialization in cryptocurrency. And it is pinned. If you're on the Facebook Live, it's pinned. What I'm going to do is I'm going to put the address out here right now. So www.pythagoras.com.
Yes.
If you are not a customer, or if you're still thinking about things, and I'm going to say, and you can correct me, Rebecca offers a free 15-minute consult, right?
Yes.
Understand everything like that. So literally there is no risk. So if you're on, go to pythagoras.com, click on the sign up button or whatever. Let's give Rebecca some business because she's obviously here. She's helping out. She's donating her time. And, you know, do it now, because if you miss now and as tax time comes in, and we all love to procrastinate, I know I do, you know, I can't help you if you wait till April 10th, right? You know, you got to do it now.
Yeah, and if my schedule is packed, because there's 2 days that I have to block off due to other obligations. So Tuesdays and Thursdays I do not do consultations. However, Monday, Wednesday, Friday in the afternoons, I block off time to take new phone calls. I really highly recommend everyone going and scheduling a conference, just so again we could talk. Once you complete the information, you get my conference number, we can chat, and then from there, if we decide to do business, you don't have to go back to schedule another conference. It would just be at will, or send me an email, that sort of thing. Definitely looking for new clients. And even if, you're just calling just to talk, I do like talking to other people, because at the end of the day, if you have me in your head, you may think of me next year if your tax professional decides, you know what, I don't want to deal with you and your cryptocurrency. Goodbye.
Great. Let's continue. We have Tracy, and I think we covered this, but I'll just ask the question again because maybe some people tuned in later. So she's saying you are taxed on the purchase of Bitcoin used to purchase an altcoin. You want to maybe just clarify that again?
Okay, so the first time you buy a coin, let me make sure I'm saying this clearly, because I want to make sure everyone understands. If you use cash to buy a coin, any coin, but if you use cash to buy a coin, that is not a taxable event. The taxable event comes when you go from coin to coin or coin back to cash. That's the taxable event. So again, when you're buying the coin, it's not a taxable event. You're just establishing your first position. You're establishing your basis. When you convert that coin into another coin or convert that coin into cash, at that point in time, that's a taxable event. You'll need to do the math, understand what's the difference, and that gets put onto your tax return.
Cool. Alrighty, let's continue. Antonio is asking or confirming the cutoff for last year's trades, meaning 2017, is December 31st. Is that correct?
Yes. Yes, you have to report. So taxes is very strict. You have to report in your year. Most individuals go on a calendar year unless you have a special circumstance. So you have to report all of your trades from January 1st until December 31st. Let me add on to that because I keep getting this question a lot too. Well, I didn't do a lot of trades this year, so I'm just going to put it next year. You cannot do that. It's the year that you're reporting. Same thing with your W-2. If you only made, $5,000 in a W-2 in 2017, you have to report it in your 2017 tax year. You cannot hold the W-2 and carry it into 2018. You have to report it in the year that it was received. So January 1st to December 31st, anything that happens in between there needs to be reported now. Now, January 1st this year until December 31st this year will be reported in 2019.
Great. Let's continue. Tanji asks, am I required to report every transaction I made on Binance for taxes since I used Bitcoin, Ethereum, or Litecoin transferred from Coinbase?
So Binance is one of our exchanges that you cannot, at least I don't believe you can't buy directly from. You have to transport from some other area into Binance.
Yes,
Do you
that's
know
my,
that to be different?
that's
Okay.
my, I've never tried to buy directly. So yeah, usually I put stuff in at Coinbase or Gemini and move it to Binance.
Okay, great. So in that case, yes, you will have to report every single transaction on Binance and the taxable transactions in Coinbase or wherever you came from to move the money move the crypto, it's not money, move the crypto into Binance in order to buy the other altcoins. You will have to report those.
Okay, so continuing. So if someone exchanges their fiat, oh yeah, we've answered this question. So if someone exchanges their fiat currency for Bitcoin and uses that to trade for an altcoin, that has to be reported. Be reported, right?
Yes. I mean, really, it gets kind of technical, and I don't like using absolute, so I don't want to say always, never, or any of that. But generally speaking, the only non-taxable, let me take the word only out. Generally speaking, the non-taxable trade that there is buying the coin. Pretty much anything that happens afterwards is a taxable event. So the first time you buy the coin with cash, not a taxable event. Anything afterwards could be a taxable event. The only other thing I'll throw in there is if you're transporting that coin you bought. For example, if you bought Bitcoin and you transferred it into your cold wallet, that is not a taxable event. The Bitcoin is still in its form. The second that it converts to cash or it converts to another crypto, at that point in time, it'll be a taxable event.
Wow. Okay, let's continue. These questions keep coming. Are we able to write off the fees Coinbase charges us to buy and send crypto to exchanges? So two fee questions. First is, when I buy on Coinbase, I get charged. And secondly, when I transfer from Coinbase to, I don't know, Binance or whatever, I also have a fee. I get charged.
Okay, so the fees adds on to your basis. Now, I've noticed that a couple of tax professionals are writing off the fees by itemizing on Schedule A. They can do that, but next year the new tax law takes into effect, and a lot of Schedule A expenses can't be written off anymore. So they need to be careful with that. But generally speaking, if you have an investment, speaking about crypto, speaking about stocks, the fees to acquire the property is added onto your basis, and it won't be written off. It just minimizes the amount of gain you're going to receive. So like I tell people all the time, I know you all hate paying fees. I hate paying fees too, right? But those fees actually end up helping you out when all of your crypto is calculated. I can't show you. I really would love to, because but I actually have my coin tracking info of a crypto transaction I'm working on right now for another client, and the fees pull right into the report, and you'll see them. They're off to the side, and they take into account for that when the calculation is done.
Well, I'm going to take a second to do a little infomercial. I apologize to everyone. It's actually
Sure.
good. So people who have been following us or who are watching may have heard that we have what's called this DU Ambassador Program. And Rebecca is actually one of our DU ambassadors. So what that means is our DU ambassadors, we give them, because the problem with crypto is it's all private and no one wants to show their money. So we will be giving, $1,000 a month. And in return for that, she has to invest it in crypto based on whatever she wants. But she has to make, within reasonable safety, her positions and how she sets it up public. So I think for anyone who wants to learn and see, we actually have the tax professional who is investing in her own cryptos. But more importantly, we can watch how she organizes her stuff and follows all that along. So this is a program that literally we just rolled out like 2 days ago. So, it's still going to be a little bit of time to get set up and everything like that. But in a couple weeks, I'm sure your stuff is really organized and really pretty and everyone wants to know how to do it.
More or less.
We're literally going to get to watch and follow along and see how it's configured. Make sure that we can configure our stuff in the same way. So when we then call you to do our taxes, you don't yell at us and you say, hey, So yeah, stay tuned on this. This is going to be really exciting. In addition to Rebecca, we have actually 4 other DU ambassadors, and all of them, they will be putting their positions in. They'll be updating them, and you guys will literally get to follow them along, as things go. So that'll be really exciting. So this is a good one. How will buying coins on Robinhood impact your taxes?
So Robinhood is like, I'm actually not familiar with Robinhood, but they do the stocks, right?
Robinhood is an interesting one because they do stocks, but what they've expanded to, they're expanding to cryptos. And what's more interesting about Robinhood is they're doing direct to crypto or direct to alt conversions. So,
great.
I could go buy Ripple directly on Robinhood. I could go buy Stellar Lumens. There's a list, and it's not every crypto, but there's a few. Now that
is awesome, and that's going to help out a lot for people that are coming straight from the cash into crypto and don't want to go through these taxable trades by going crypto to crypto. That sounds like something that I need to look into. So anyone wants to give me the referral link, I'll click on it. I think they said they're only in a couple of states right now. They're still expanding, right?
Yeah, well, so 2 things. First, they signed on like 1 million customers in a week or something like that. It's still on a wait list right now. So that's exciting.
Gotcha.
Exciting for me in the market because outside of some more money, I just put some new money in with the latest, but I'm not really putting new money into the crypto market at this point. Well, I say that, but then I keep putting it in. But knowing that more money is coming in is always a good thing if you have existing positions, right?
Yeah.
Because that helps with, oh my gosh, there was a Goldman report that, Bitcoin's going to go or crypto is going to go to 0. It can't be going to 0 because there's 1 million people that signed up for it that want to put more money in, right? That's exciting.
Exactly.
So now the one thing, and I'm curious to understand more, but when I took a look at the Robinhood thing, The problem that I saw was that with Robinhood, you don't actually have your keys. So you can buy the crypto on Robinhood, but you can't move it anywhere. Like you're in Robinhood, so it's kind of like
Good.
So I don't know if that's good.
Well, what I'm saying is it's good because this will simplify the crypto issue. Robinhood's going to give the 1099B form, and they'll be able to tell you easily what's your gains, and they'll give you the 8949 for you to file your taxes. See, the 8949 is what we're trying to do, or what we're trying to calculate off of the different exchanges. But if Robinhood makes you stay there and you can buy the crypto directly in cash, that reduces your taxable events, and you will get a report from Robinhood so you don't have to do all this crypto calculation. So that's actually a great idea.
Well, so that's interesting. See, you think it's great, and I see your perspective. I think that's the worst thing in the world. And I understand.
Really?
Well, so let's look at this. And it's honestly, it's a perspective thing, right? So the main reason for me to have a crypto ultimately is to own it myself and be in control, right? So if I buy my Bitcoin, it's my gold. So I want to know that I can store my crypto in my hardware wallet, and if I need to kind of go incognito, I can disappear. I've got my crypto in my back pocket, and I'm waltzing out, and no one knows who I am. I'm in control. Life is good. If I'm in Robinhood and I can't disappear, it's not possible for me to like go incognito, because I still need to go into Robinhood, and seizure is a possibility with my cryptos that are in Robinhood, right? Because they've got my tax information, they've got all that tracked. So that's interesting.
Gotcha.
I'm not saying good or bad. That might be more of a purist view. The second thing which becomes intriguing is there are certain cryptos, like there are some that are, Robinhood, the way Robinhood has it set up, it makes it a pure investment vehicle, meaning I'm buying the crypto for appreciation. And the reality here is most of these cryptos, or supposedly a lot of these cryptos, should be utility tokens, meaning there's a usage, and I'm buying them, hypothetically, I'm buying them today for some usage tomorrow. So for example, Ethereum, when I buy Ether today, they're changing things. It might go to proof of stake or whatever, but Ether or maybe Ether or gas, for example. Gas is a token that's supposed to be consumed on the Neo network, just like Ether is supposed to be that gets consumed on the Ethereum network. If I just buy the Ether on Robinhood, I can't actually use it. You see what I mean?
Gotcha. Oh, yeah. Then that's where the research part comes in, because obviously if someone's buying it for their appreciation value, then they're going to want to go for Robinhood, and hopefully it will appreciate, right? But if we're supposed to be using it, like I have my Neo and they give me my gas dividends, and I was, really shocked when I saw it, but now I'm like, oh, they give you gas for holding Neo. I didn't know that. That is something that would steer me away from Robinhood. But I'm speaking I'm talking about taxes and all this. What's taxing and what's not, calculations.
From a tax thing, it makes perfect sense. Now, the other thing that's intriguing, though, is, and this is an unknown, what about the airdrops, or what about the forks? So, I'm not sure if you've been in it long enough, but there was a big controversy with Coinbase, because for a period of time, when Bitcoin Cash forked, Coinbase said they didn't support the Bitcoin Cash fork.
Yes.
So, I remember talking to Dr. Boyce about this, and, Coinbase later reversed their decision, back in November. But, Dr. Boyce was like, I got all this Bitcoin. Where's my Bitcoin Cash? And I was like, where's your Bitcoin? Like, it's in Coinbase. I'm like, Coinbase has your Bitcoin Cash, tough shit. Right? And Bitcoin, if you got a 1-to-1, if you had 100 Bitcoins or 50 Bitcoins sitting in Coinbase, there were 50 Bitcoin, and you had those 100 Bitcoins at the fork, that means that you would have gotten 100 Bitcoin Cashes. And, that's a material amount of money, that Coinbase at first said they didn't support, but now they changed their mind. But the other thing is on the Bitcoin there's been a few more forks. I think there was like a Bitcoin Gold fork, a Bitcoin Diamond.
Yes.
You know, so a lot of the forks aren't worth anything, but there were a few that actually, like, I forget which one. I think it was like a Bitcoin Diamond or whatever. You know, it was actually worth something, and I was like, wow, I've got some Bitcoin Diamond here, and I actually traded it for something else just because I was just kind of surprised it was worth something. But you know what I mean? Like, so those aspects to be mindful of. The fork thing, you know, right now, and this is just, you know, this is not tax related, but this is just general. Right now, there's an upcoming Litecoin fork. And I made a comment saying,
yeah, Litecoin Cash.
you want to get your Litecoin off of Coinbase. You were like, why? Is it because it's going to tank or something like that? Actually, it wasn't a tanking thing. You know, I'm fine with Litecoin, and I have nothing wrong against Coinbase or GDAX. But to my knowledge, Coinbase has not stated that they will be supporting the Litecoin fork. So if they don't support the Litecoin fork and the Litecoin fork occurs and your stuff's on Coinbase, you know, you don't get the fork, right? So, you know, in my case, I think I still have 20 or 30 Litecoins sitting on Coinbase. I got to get that off because I want to move that to my wallet so that when the fork comes, I get that. So, I mean, I'm not saying that Robinhood's a bad thing. Like, I see what you're saying. There's a lot of benefits from the convenience side of things, and I totally get it. But for people who are in the space, and, you know, most of the people who are here, you know, I would say we qualify under sophisticated investors. You know, you're in the top 1%, or, you know, you want to be in the top 1%. You know, these little things add up, you know. I mean, think about it, right? If you had a position,
They do.
And the fork happened, and Coinbase never supported it, and your stuff was on Coinbase, you would have missed out. And given how the appreciation was, you know, if you had bought, I mean, let's just do some basic stuff. And I'm not doing it to like sell anyone anything, but let's say on January 1 of last year, I bought 10 Bitcoins, right? So they were what, $1,000 each or whatever. So I put 10 grand in Bitcoin, and I just left it on Coinbase and forgot about it, which is fine. That happens. And let's say Bitcoin, they just, you know, Coinbase never supported the Bitcoin Cash fork. They just forgot about that too. I didn't know any better. So come today, if I'm like, where's my Bitcoin Cash? I mean, I would have appreciated my Bitcoin. My $1,000 Bitcoin would still be worth $7 grand. So that's a good appreciation. But I would have missed out on 10 Bitcoin Cashes. And Bitcoin Cash is $1,000
Wow.
$10,000 because, you know, I just didn't pay attention to that. So those are questions to think about.
And that makes sense. I actually have a question to ask you. So does Robinhood receive your fork if you buy it off of them and the fork happens, and do they get the fork and they just don't give it to you?
So technically, that's how Coinbase has all that Bitcoin Cash sitting there. I can't speak for Robinhood because I don't know how it's set up. I'm just guessing based on what it is. I honestly haven't looked at it that closely. But yeah, Coinbase. So what happened was with Coinbase, they actually hold the private key. So they hold the key, and you are kind of you're in their world. So when the Bitcoin Cash fork happened, they had it all.
Gotcha.
Just sitting there. And yeah, so the reason
that's messed up. Look at all that money they had. Wow, that's insane. Okay, yeah, I see your point, and I agree. Yeah. I'm just thinking from a tax perspective, but that makes a lot of sense. Like, they're going to hold whatever forks come out, and they're not going to give it to you.
I mean, why should they?
Gotcha. Well, they got to make money too, right? But that's kind of like stealing because they're using your Bitcoin or they're using your altcoins in order to get the fork. I don't know.
Well, it is and it isn't. I'm sure in their terms of service, like, I mean, let's assume that they're sophisticated people, right? Because Robinhood has money, right? And, you know, I think there was just a big, didn't like Jay-Z just invest in it or something? I don't know. Like, I just heard there was like
I heard something like that, yeah.
Yeah, right? So, like, if I'm Robinhood, I'm thinking to myself, okay. And ultimately, you know, this is, you know, that you call it knowledge is power, but, you know, it truly is. If I'm Robinhood, I'm thinking, okay, there's all these people out here. And we know most people, like, they use Robinhood because it's simple and easy, and I just click the button, I forget about it. So why don't we attract people with zero fees, get them into our cryptos? We'll write something where we're kind of renting them the cryptos, which is essentially what they're doing. Don't let them trade them.
Yeah.
In addition to getting more people, on that, we'll also benefit from all the forks. Because we think forks will happen. If you look at, you could argue it's unethical. I'd argue that's just good business sense, because the average person doesn't even know what a fork is. Dr. Boyce, I remember he was furious when we had this conversation. He wasn't furious, but he was really tweaked. But he's like, yeah, it is what it is, right? I think at the time he had 30 Bitcoin, and we were talking. It was September or August, right after the Bitcoin Cash. No, it was September. It was after the Bitcoin Cash fork occurred. Bitcoin Cash had just jumped up to $1,500 or whatever. But before he supported it, he was just saying, where's the Bitcoin Cash? And I was like, Coinbase has it. He's like,
wow.
There was some of that. And it's like, ugh. But then he's like, well, I guess, that's business. And if I was in Coinbase's perspective and someone didn't really look at it that closely, I have no obligation to give it to them. Right? I'm sure it's clearly stated in the user agreement and everything. But, no one reads that fine. No one reads it.
No, they don't. They don't.
It's just, and this happens all the time in financial stuff. The whole Wall Street is based off of derivatives are based off of that whole industry, right? Goldman Sachs, someone says, hey, go buy me, a bazillion dollars worth of oil future, and I'll pay $80 per oil future, or whatever the heck that number is.
Yeah.
So these trading desks where they're just trying to, make the edge, they say, okay, they're going to buy for $80, but as if I can buy for $70, I make $10. Do you see it? There's businesses in the trading in the Wall Street world just all based around.
Yeah, they hedge. Yeah.
It's hedging, or it's just business. So I would imagine, if I was Robin and I've got 10 million users who are not sophisticated, right? And I'm not saying, I don't mean it demeaning, but the average Robinhood user uses Robinhood for convenience. So I'm like, I've got all.
Yeah, exactly. They don't have 200,000 sitting to invest.
Yeah, and they're offering no free. They're offering no fee purchases. So that's exciting. So the average person says, okay, I'm going to use Coinbase and pay 1.5%, or I can go to Robinhood and pay 0. I'm going to go to Robinhood and pay 0. Robinhood gets a customer, but they make more money because they get all the forks.
Exactly. Wow. You know what? You're right.
And you could say that's unethical. That's just business. I look at that on that front. So, okay, sorry. We keep going and everything like that. Let's get back to taxes because we've had some comments. Is there a threshold for having to report your crypto? For example, in 2017, I did approximately 30 trades on Binance, 2 sells, and received no money. I thought Coinbase was only sending 1099Ks to those who did 200 trades or received cash of more than $20,000.
Okay, so let me clarify. The 1099K is actually not the form that's filed. It's not the form that's filed. That's just an informational return, and they're letting the IRS know who you are. That's it. That's really all it is. It does not produce the 8949. If you have other exchanges, you'll have to do the math. But again, the 1099K isn't your tax form. I know a lot of people saw that a couple of days ago and they got really freaked out about it, but that's just stating you did over this threshold, and the IRS is now going to know about it. That's all it is. You still have to report. So again, it's your choice. If you've only done 5 trades and you say, you know what, this is too, 5 trades is really easy in my opinion, but that could be very subjective, and I will be empathetic to that. But if you've only done 5 trades and you haven't made any money and you just don't want to be bothered with it, it is your choice whether or not you report. As a professional, I'm going to tell you, you should report everything, but yeah.
Cool. Okay, next question. Let's talk about tracking again. I think a few people missed it. What's the best way to track it? Do you recommend creating a spreadsheet for tracking your cryptos? Let's talk about just glaze back on tracking cryptos.
Again, do it any way you feel that you need to. Just at the end of the day, if you're selected for audit, you want to be able to show something and have that document substantiate your claims of your crypto trades or your crypto losses. I suggest that if you are on the exchanges, if you're using the wallets, just pull the history. Pull the history for the year, save it, email it to yourself, keep it for 4 years. That's the amount of time that the IRS can say, hey, we want to audit you. It's really 3 years, but just keep it for 4. You just never know. But keep it. And at that point in time, just save your documentation. You can make your own spreadsheets, but if you're on the exchanges, they do some of the work for you, even though some of the information looks like it's coming back in gibberish. Just save the history.
Cool. Hey, Rebecca, I need to step away for a second, take care of something with the kid. Why don't you take the next question? So I'm going to mute myself, and I think you can look at the Q&A box. Why don't you just grab the next question?
Okay. We answered, is the exchange of one cryptocurrency for another taxable event? Yes, it is. It's a taxable event. You could either report a gain or a loss. Andrew says, you may have already answered this question, but what's the best way to track all of these for tax purposes? Again, you can handwrite it. It just makes more sense that if you're on the exchanges, use the histories that's in the exchanges to pull your reports for the year. Kevin Jarvis asked, I know we have to report when buying crypto using crypto, but after that, is it when we sell the coin? Like if I hold on to a coin for 3 years, do I pay taxes on that every year? No, when you're holding a coin, there's no taxes associated. The taxable event is when we trade it from one crypto to another or sell it. So if that taxable event hasn't occurred, you're not reporting it. What about fees charged to buy crypto? We talked about that, and pretty much your fees increase your basis, which adds on to your basis. So the fees help you out. I know we don't like paying them, but the fees do help you out with your crypto calculation. It makes your capital gains taxes go down. So basically it would be a good idea to come up with a way to directly buy each coin with cash. Yes, that's pretty much what I'm saying. If you buy directly with cash, it's not a taxable event. You will need to know the basis of how much you paid. So always keep your records. But generally speaking, it's not a taxable event. And so if we're investing into this crypto space, what is all that we should be doing? We definitely.
When you click the live, if you click done after you do the answer, like a done button picks up, that actually clicks.
Sorry.
No, not a problem.
Okay, yeah, I'm trying to click them done then. I'm sorry, I just put answer live. Okay, there it is.
Okay.
Okay, what's the next question? I'll click these done.
In your opinion, will the new laws benefit us crypto investors? If so, how?
That's really subjective. So the new laws don't have anything to do with crypto. It's more about the way that you use them. As we talked about earlier, if you are making a lot of money in cryptocurrency, you may want to, incorporate yourself to take advantage of the corporate tax benefit. If you're going to do something like that, you definitely have to have an accountant. Corporations require you to do so much, and articles of organization, shares, boards of directors, you have to have on-point accounting, you have to have financial statements. So again, you could do that, but 1031 comes up a lot, which is the like-kind exchange. In my personal opinion, you could have possibly used, it's a very aggressive position to take against the IRS using 1031, but you could have used 1031 to say, well, crypto to crypto change, I went on an exchange and I sourced out what type of Bitcoin I wanted to buy and all this other stuff. At the end of the day, this needs to be documented. If you're using the like-kind argument, if you're using the like-kind position, you still need to document it. There are tax forms for like-kind. I believe it's 8824, but don't quote me because I really don't know that off the top of my head. But there are tax forms for that. You'll need to fill it out for each trade, just like you saw for the 8949, how we filled out every single line of trading. It will be the same way in that instance. It's a lot of paperwork. Yeah, so, okay, roundabout way, the new tax laws, in my personal opinion, doesn't really affect cryptocurrency. It's just how you use them.
Cool. Let's go on. I just started in December. Do I have to file?
If you have a taxable gain in December, yes, you do have to file, even if it's 5 trades or if it's 1,000.
Great. Excuse me. So as we are investing into this crypto space, what is it that we all should be doing? I know we should keep track of our alt-to-alt transactions and register on either site, such as cointracking.info or bitcoin.tax. Is there anything else we should be doing?
Don't lose your money. No, you want to make smart investments, right? So you don't want to lose your money. Keep your documentation, know where your exchanges are, follow the news, make sure you know what's going on. It's a lot of information to take in, but I don't know, maybe I've just been doing this for a while. I pick up things here and there. I'm in a lot of groups, I'm in a lot of spaces, so my ear is always to the ground on what's going on. But you want to know what's happening. Inside, outside cryptocurrency, anything about cryptocurrency. If there's an exchange that looks like it may be going down, you want to pull your coins off. But generally speaking, for taxes, documentation, keep your documentation, store your documentation, and calculate your trades.
Great. We have a question from, for some reason, I always call you this person's name, which is wrong. So, your alter ego, which is really not your alter ego.
Yeah. Rebecca McFadden.
She's the real Rebecca McFadden. And I don't know.
She's the real Rebecca McFadden.
I don't know why you do this. So, but let's answer her question. Based on your opinion, what do you think the penalty will be for not reporting your crypto net gain or loss to the IRS? That's a good one.
It's the same as not reporting your income to the IRS. It's the same for not reporting selling a house to the IRS. I mean, it could be nothing. You could fly under the radar and the IRS has bigger fish to fry, so they're not going to come after you. Or you may get involved in some completely unrelated roundup that the government is doing, and now they start investigating every single person involved in whatever exchange wallet or whatever, and now they're investigating you and saying, well, hey, did you pay your crypto taxes? I mean, I can't really give you that answer. It could be nothing, it could be something. There is a penalty, and if you get caught, there are consequences. That's the best I guess I could state.
Yeah, so I guess ultimately, I mean, the tax professional won't say it because, she can't. But it's a calculated risk, right? If my taxes are de minimis, maybe I can do. There was a guesstimation formula. I can say I made $100, so I don't want to trade. That I could put in. Or the other thing is all this stuff is only if the IRS audits you. So if you don't get audited, and what's the window? You said 4 years or 7 years? What's the audit window?
I mean, the thing about it is, though, the IRS has a lot of different rules, right? And if you have an unsubstantiated reported amount for a specific dollar amount or more, the penalties can be really, really harsh. I've said this before, and I'm going to say it again. You don't know what coin you have, and you don't know if you're going to be the next crypto millionaire. I have at least 3 of them right now that are my clients. They put in $20,000. They didn't know what was going on, and now they have $4 million in their account. They are probably one of those people that the IRS will be looking for. So if you say, hey, I'm going to buy $5,000 worth of this coin, and then all of a sudden it blows up due to a big pump and dump, or everyone starts buying it too, or whatever have you, and all of a sudden your portfolio went from $10,000 to $1 million. I mean, at that point in time, you're going to have to explain to the IRS how you didn't report the previous years when they start looking at the current year. It's your choice. It's your choice, really.
Cool. Let's continue. Hey, let's talk about Puerto Rico. Puerto Rico's flash. Do you know anything about Puerto Rico, or?
So I've been doing some reading about it, because I actually did have a client seriously tell me that after I do his tax return for his crypto calculations, he is going to find some way to get out of the army. I don't know how he's going to do that one, but he said he's going to find some way to get out of the army and go live in Puerto Rico for 6 months. So from my understanding, if you go to Puerto Rico, it's a tax-free haven. I don't have Puerto Rican clients to do tax returns for, so I can't really comment any more on that. But there are tax benefits and advantages if you are able to move to Puerto Rico. You'll still be within the U.S. since it's a Commonwealth, but you won't be paying the taxes that everyone is trying very hard to avoid. I'm still looking into it. I can't comment any more than that, but I do know that that is out there. I've seen a couple of different articles about it, and within the tax groups, we started talking about it too.
Yeah, and if you're interested, if you're members of the Digital Underground, we actually have a member. It's a friend of mine we've known each other now for 15 years. His name's Gino Villarani, and he actually lives in Puerto Rico. He owns a nice business in Puerto Rico. So if you're looking, I mean, this is a personal decision. I've actually tempted with it because not only does Puerto Rico have very advantageous tax laws. Right now, Puerto Rico has this thing called Startup Puerto Rico going on. And literally, if you go there and apply, they will give you $40,000 to go start a company in Puerto Rico. So,
oh, wow.
Yeah, Rebecca, had any interest in starting a tax service company? And this is
I know, right? Go to Puerto Rico and then
6 months.
Good idea.
But this isn't, this is an investment. This is literally a grant. They're basically trying to get you for 6 months. I think they pay you $30,000 or $40,000, and you start a business there. So,
Gotcha.
I've been joking with Lawrence or his brother, saying, one of you guys just have to move to Puerto Rico, because like they're digital nomads. They can live anywhere, right? So
yeah.
Cool. Moving on. Can you cover when you have losses for the year?
Yes. So that is very important because you can report the losses on your tax return. They go against your regular income. The unfortunate thing about it is, and I say this is unfortunate because, the IRS taxes you, they want all their money up front, right? But if you lose money, they will only let you take $3,000 a year, net losses. And then you will have to carry any excess losses to the next year to use them against your crypto gains, or again, take another $3,000 loss on your return and keep going forward. So it's pretty unfortunate, but you can report, you should report your crypto losses on your tax return, take advantage of that, and it will go against your ordinary income up to $3,000. Anything excess gets forwarded for future years.
Cool. So I just want to take a quick second and ask, we've been on for 2 hours. I'm happy to stay on because I just like talking to you. But do you need to take a break for a second? Do you need to wrap up?
I definitely need to wrap up. I have a child that's sleeping in front of me, and he's like, what am I doing? It's like he's sleeping. So yeah, 2 hours is good. Let's take about maybe like 3 more questions and then say goodnight.
Okay. So let's go to the next question. Will private coins that are decentralized be taxable?
Okay, so all coins technically are taxable if they fall into that event. Now, that's going to be challenging to track. Dissect that however you will. But as a rule stand, if you have a taxable event, you're supposed to track it. And if you're audited, you're supposed to provide the documentation. So that's what I'll say about that. Again, the professional answer, right?
Sorry, I'm just answering a few text questions.
Gotcha.
Okay. What is the tax impact of holding crypto in a trust?
That's a good question. So trusts also, you have to pay taxes on trusts. You'll definitely have to get it formed correctly, whether it's a irrevocable or revocable trust. And I'm actually looking into this right now for an investment club. So this is something I'm definitely going to have to get back to you about. But just so you are aware, trusts are taxed as well.
Great. Do I still have to report taxes even though I'm living in Puerto Rico? Do you know how 20/22 works?
Yep, that's the one that I'm definitely going to have to get back to you about because I'm still learning about it myself, and I don't have Puerto Rican clients, so I definitely couldn't answer that confidently right now.
Not a problem. Can you talk about airdrops? Are airdrops taxable, especially if they're free and you hodl?
Okay, so airdrop, in addition to forks, right? So I guess I'll talk about it from that perspective because I've had more experience with that. I haven't had too many airdrops yet. There are two different ways to look at this, and this is going to come down to your tax professional, or this is going to come down to you if you're going to do your own taxes. When an item forks, it has a zero basis, meaning you didn't pay anything for it, but you could either take it as income immediately and pay the taxes on it, or you can not take it as income and just hold on to it like investment property. And at the time when you either convert it to another coin or at the time you convert it to cash, then you'll just be paying capital gains on zero to whatever that amount is. So professionals are very divided in this area, but it could go either way, but it's going to have a zero basis. So either you're taking it as income immediately when you receive the airdrop or when you receive the fork, or you will be holding it with a zero basis. And when you convert it, then you're going to pay the capital gains on however long you held it.
Great. And to add it, there's gains and their losses. Someone says, if I bought my Bitcoin for $8,000 and when the time I was ready to trade to an alt, it was $7,000.
That's a loss.
I have a capital loss as I trade into my alt on that side.
Yes.
Okay. Oh, here's interesting. What about a transaction that takes place as a crypto? So like, let's say I buy some Bitcoin and now it's 6 months later and, I use my Bitcoin to go buy, I don't know, like a car or something like that.
Oh, that's still a taxable event. Again, you're going from the crypto to, you're selling the crypto for the coin or trading it, whatever you want to call it. But pretty much so for example, we hear about those Lamborghinis that are being bought for $115 in crypto, right? Well, the basis is $115. The value of the car is the ending figure, and the difference between it is your capital gain. So it doesn't matter if you go to Starbucks and buy, a cup of coffee with your Bitcoin. If the amount appreciated or depreciated at the time of the transaction, it is a taxable event, and you will need to do your crypto calculations and report that on your tax return. There's no way around this. That's pretty much what I'm trying to say. There's no way around this.
Okay. What is the actual tax form we need when calculating our crypto taxes from the exchange? Is there like a form, like a form 10?
Yeah, so you need to report everything on the Schedule D, but the 8949 is, the form 8949 is where all the transactions are going to flow in through, and it'll eventually get put onto your Schedule D.
Okay, well, we've had a few extra minutes to answer questions. We've got a sleeping child, so Rebecca, I think wrap up, but before we wrap up, let's give a thank you to Rebecca. And Rebecca, why don't you tell us again your website, what you do, and everything like that. So people who are still tuned in and have more questions can reach out and contact.
So again, my business is called Pythagus, and you can go to www.pythagus.com. That's spelled Pythagus, an unusual name, but I like it. I hope it does something, and if it doesn't, well, it's still mine. I don't care. And the best way to reach me is by making an appointment on the conference scheduler to get onto my calendar, and we'll actually talk on a conference call just to answer your questions, exchange information. And if you choose to do business, then I'll give you the other ways of contacting me offsite. Definitely also too, if you just want to email me, you don't want to necessarily set up a consultation, but you maybe have a quick one question that you just want answered, you can send me an email. I will respond with a general response, not as your CPA, because you're not my client, you haven't retained me, so I can't give you the specific response to your question. But I am able to help in that way. And I will be doing taxes until April 17th, more or less, and I'm looking forward to it. I have some great clients now. They're really excited when they talk to me. They make me feel awesome because I'm like, I'm just this little tax lady, who cares? But they make me feel really great, and I look forward to really working with more people. And I can do business all over. I have a client portal. It's really easy. So as long as you're okay with me not being in your location, we can definitely do business.
Wonderful. Well, hey, thank you very much, Rebecca, for your time. Probably going to be do another session in a couple weeks because people will continue to ask tax questions. For members of the Digital Underground, is this our third or fourth? I don't remember how many times we've been on. But this session, along with our previous sessions, are recorded and available in the class. So there's a class called Digital Underground Training. And if you go to that Digital Underground Training, this will be a couple days, but there's a section actually for crypto tax Q&A with Rebecca. So literally all you have to do is look at those, and if you have questions, you can review the Q&As and everything on that side. So I think that's pretty exciting. Rebecca, again, thank you so much for your time. We know you're in the middle of everything, so your generosity is incredibly appreciated.
Yeah, I think this was a great one. I'm really pleased with this one. It went over 2 hours, but this was really great. I didn't really notice the time until I looked up and my son just started laying in front of me, and I was like, okay, I gotta go now.
No, that's great. So yeah, if you haven't yet, go to her website, pythagus.com, sign up, talk to her. She's smart, she's fun, she loves talking crypto. I mean, you can't get anything better than that out there. And we'll just call it a wrap.
All right, that sounds great. Bye, everyone.
Good night. Thanks, guys. Bye-bye.